Morning, Bill here with the Metals Minute. Today is Monday, June 20th, 2022. Well, we have some interesting things happening. The metals were higher over the weekend, and that's always welcome. But we have some other news that's not as welcome and a little more concerning. Concerning energy supplies and the conflict that's going on in Russia, that's in Ukraine. It seems like it might be spilling over further into Eastern Europe. We have, first of all, Germany saying that they're not going to have enough gas, natural gas, to provide both the heat and the electricity they need. So they are ramping back up to unmothball these old coal-fired power plants, to try to use those to produce energy for this winter, because they're going to need their gas to provide heat. So they have these mothballed power plants from coal that they're trying to get ramped back up as quick as they can, because they're in a real situation in terms of energy access due to their disagreements with Russia and just things going on there. Now, we also have Lithuania, which is one of the provinces between Russia and the province of, I forget the name of it, Novograd or something, but Lithuania is between the two, and it's been a transit point for many years. And they are announcing they're not going to allow any goods to go back and forth on their land anymore. So this kind of cuts off this Russian province, and it's creating another level of disjointedness in Europe. And this is not a good sign. This is not what we want to see happen with this kind of conflict. It would be better for things to dissipate and become smaller, but it seems they're becoming larger. So that is going to further impact international supply chains and the inner workings of international economies. So, having said all that, we're still in a similar situation here, although temporarily in the United States. We're seeing inventories build back up a little bit as people run out of money. It's not because supplies are necessarily increasing. It's just that people don't have the way to purchase everything that they want to purchase. So temporarily we have supplies available now in greater quantities than we have. Automobiles are beginning to, inventory levels are beginning to normalize just a little bit. And professionals in that industry are saying that they could foresee within another 2 to 3 months things go from a seller's market to a buyer's market in automobiles. So that indicates that our economy is slowing down some. Inventories are building back up again because there's just those issues going on. Meanwhile, we have gold and silver still holding up very well, and platinum. And we see the markets are about 161 days into the current bear. The average bear market goes for, I believe it's 279 days. So sometimes it goes much quicker. In 2020, we had one for about just a little over a month. But that's an anomaly. Looking back, all the way back to 1929, every bear market we've had, the average is quite a ways longer than what we've already experienced this time. So we may see stocks continue to have days where they have an upshoot for a little while, but chances are we're still going to be in a bear territory for quite some time. Meanwhile, the same environment traditionally is good for precious metals. Thank you for tuning in. We'll do the market update on Wednesday. See you soon.